Good afternoon, everyone, and welcome to our IT Services Benchmark webinar, Vendors Drive BPO Growth by Acquiring or Developing IP and Industry-Specific Offerings, highlighting the results from our recent IT Services Benchmark and Vendor Reports. My name is Allison Crawford, and I will be your host for today's session. BPO growth continues to outpace other services, fueled by increased use of analytics and cloud-based BPO solutions, as buyers seek new avenues to trim costs and standardize processes. BPO growth will result from the increasing need for analytics-enabled solutions that streamline processes and harvest business insights from organizational and client activity. Vendors will continue to invest in business process as a service, or BPaaS, platforms that provide process excellence, resource management, and industry insights to clients. In this webinar, we'll focus on how these investments in BPO is shifting the IT services market and what should you do to align to demand. Before I pass this over to the analyst team, there are a few logistics I'd like to cover. First, we're recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. The analyst will address them at the end of the presentation. Or, if you'd like to set up a client inquiry for more detailed private discussion, please reach out directly to either them or myself at the end of the conversation to set up that discussion. Third, we're going to send out all the slides to register for everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. Now let me introduce analyst Elitsa Bakalova, Principal Analyst Ramunas, Svarcas, Principal Analyst Patrick Heffernan, and Analyst Boss Hirstav from the Professional Services team here at TBR. Elitsa has been covering IBM, Capgemini, Atos, and T-Systems for the past 8 years, as well as the global delivery market landscape and management consulting industry. Ramunas is one of our lead professional services spokespersons on cloud, providing both analytics and strategic advice, and he also spearheads our global delivery market landscape benchmark and is the lead professional services analyst in our cloud program. Boz covers several of the largest services vendors and is a key analyst on our global delivery market landscape, management consulting landscape, and services landscape research. Patrick is a State Department and Deloitte alumni and leads our professional services research team. With their inputs, the professional services team has guided countless clients to improve margins and understand new global opportunities to expand their reach. And with that, let me hand this over to Patrick.
Great. Thank you all very much for joining. And as you can see, we have a whole cast of characters to give you this presentation today. And the reason we did that is we want to make sure that you hear lots of different voices, and we'll probably even get lots of different opinions when the questions start to roll in. The whole idea with this webinar is to make sure that we examine all the different issues, the different things that are coming up within the IT services space. So this first slide just shows you the benchmark that we're talking about. We publish it 4 times a year. It's one of the more comprehensive benchmarks within TBR, and it's built on the research that we put into each one of these vendors. So all of our benchmarks are built the same way in the sense that we do the research and we do the analysis vendor by vendor, and then we compare all the apples and oranges together and create the benchmark. And so the discussion that you're going to hear throughout the rest of this webinar that touches not on specific vendors but about on trends is built by looking at all the different vendors individually. So our research is very vendor specific. We look at the business models, we look at performance metrics, we look at strategies against execution, and then we build our industry-wide trends based on that. So that's what the benchmark is. These are the 3 broad themes that we're going to cover today. BPO performance specifically. Within the benchmark, we look at 4 different service lines: consulting and systems integration, BPO, ITO, and what's the 4th? BPO, ITO, AO, right? Yes. Sorry, just had a complete blank on that. So what we try to do every quarter for this webinar is present one of those 4 service lines. So today we're going to focus on BPO, and Elitsa is going to walk through that. We also want to talk about portfolio. Ramunas is going to cover a lot of the implications of cloud, a lot of how the portfolios are developing. We're also going to talk about delivery, and Boz is going to hit on all of those. So with that, I will now turn it over to Elitsa to walk through BPO performance. Elitsa?
Thank you, Patrick. I want to make sure that everyone hears me okay, and we'd like to start with slide 6. BPO revenue growth decelerated from 7.5% average trailing 12-month year-to-year growth in 1Q13 to 3.4% average TTM year-to-year growth in 1Q14. However, BPO continues to lead in terms of growth due to demand from clients to cut costs, standardize processes, and drive business outcomes. The graph we have on slide 6 represents average trailing 12 months BPO revenues and growth, and overall IT services growth for the 30 vendors that we include in the IT services vendor benchmark. BPO growth, which on this slide we show in the green line, began to decelerate in 2Q12 and continued its downward trend in 1Q14. However, BPO outpaces overall IT services revenue growth due to its attractive value proposition. Key areas that drive growth in the service line include vendors' emphasis to provide clients with business outcomes and cost savings, the combination of horizontal and industry-specific services, integration of analytics into BPO to provide business insights and support decision-making, cloud-enabled BPO, which allows clients to take advantage of the CapEx to OpEx shift, and at the same time allows for automation and quick delivery. And last but not least, cloud coupled with analytics and business value add. On slide 7, let's see how BPO performs compared to the rest of the service lines. In 1Q14, all outsourcing service lines, including BPO, applications outsourcing, which we'll call AO, and ITO, decelerated in growth when compared to the year-ago quarter. BPO was the fastest growing service line in 1Q14. However, it experienced the steepest deceleration when compared to AO and ITO. While vendors still succeed to expand their BPO revenue, deceleration of BPO revenue is caused by challenging market environments, pricing and competitive pressures, and shrinking deal sizes due to critical clients that examine options for multi-sourcing as well as cloud-based solutions. For example, many business processes are now moving on from on-premise model to business process as a service, cloud-based model. Vendors are building out their business process as a service solutions for functions such as HR, finance and accounting, marketing, and supply chain. They add vertical flavor to the solutions to appeal to customers in cloud-adopting industries such as retail, healthcare, and financial services. At the same time, cloud's pay-as-you-go model erodes the traditional BPO revenue streams, further shrinks the length and size of the deals, and pressures BPO revenue growth. If we can move to slide 8. On this slide, we show the leaders and the laggards in BPO for our benchmark. The graph is based on TTM BPO revenue and BPO revenue growth, as well as overall IT services revenue growth. The bubbles on the graph reflect the size of TTM BPO revenue for the vendors that we cover. Growth leaders such as Ramunas, TCS, and Infosys, shown on the far right side of the graph, benefit from industry specialization and platform BPO offerings, as well as packaging of BPO with consulting, applications outsourcing, and ITO. BPO leaders, which we show in large bubble size, such as Xerox, Accenture, and Capita, build scale through acquisitions. For example, in 1Q14, Capita acquired Crown Mortgage Management, a residential mortgage administration vendor, which will expand Capita's offerings in the financial services industry. On slide 9, we have an example of 2 fast-growing BPO vendors. In the past 5 quarters, both Cognizant and TCS expanded their BPO revenues faster than the average BPO revenue growth. Cognizant's BPO caters to industry needs in high-growth verticals such as healthcare and financial services, supporting the company's above-average BPO growth. The company enriches its BPO offerings by building platform-based business cloud solutions. Cognizant also uses its footprint in the Philippines to provide BPO for the U.S. healthcare industry. Since the company acquired Medical in 4Q12, Cognizant expanded its delivery resources in the Philippines from 2,000 people at the time of the acquisition to 3,000 by the end of 2013, and now wants to add another 2,000 people in the region by 2015. The Philippines is an important location for Cognizant, as the company depends on the region's talent pool with its skills in nursing to provide services in the U.S. healthcare industry. TCS, on the other hand, pursues nonlinear growth through technology-enabled offerings, including software products and platform BPO. Effectively, the company is shifting from labor-based services to software-based and enabled BPO, allowing revenue to increase faster than headcount additions. BPO provides industry-specific offerings for the insurance industry, government sector, biopharmaceutical industry, and banking. Cross-industry platforms that cover horizontal functions such as F&A, procurement, human capital management, and TCS's analytics platform support the company's BPO growth. And the last item that supports TCS's growth in BPO is Digital Software and Solutions Group, which the company launched in 1Q14 and will be developing vertical-specific cloud-based and on-premise solutions. For example, in January, TCS launched the Digital Commerce, Customer Intelligence, and Insight solutions for the banking, financial services, retail, and communications verticals. Now I'd like to turn it over to Ramunas to go over the BPO portfolio section.
Thank you, Elitsa. So we just heard, we have several vendors that are being very successful, and there certainly are others that are being very successful in the BPO marketplace. What's driving this success is that the BPO vendors are really re-engineering their portfolios. Cost savings continues to be a key element for anybody that wants to partake in business process outsourcing and utilize the outsourced services. However, traditionally, BPO has always been a labor arbitrage approach, where you're actually levering low-cost labor. This model has kind of run its course with effectively all the BPO providers have recognized that labor arbitrage is commoditized to a point where you really can't create a lot of additional cost savings by hiring some less expensive people. You've gotten to the point where they have to still have a minimum skill set. And as a consequence, they've run out of room from that standpoint in terms of actually making money. At the same token, customers continue to expect that the costs for outsourcing certain business processes are going to decline. Therefore, they're looking for some kind of value. If it's not a further cost reduction, then definitely there's got to be some additional value presented from the BPO vendors. And how do these BPO vendors really provide this value? It's through innovation. And there are four avenues of innovation. This next slide here, on slide 11, we identify the four avenues that the various vendors are leveraging and using. The goal, really, for these vendors is to develop IP, develop technology solutions. This improves the speed of delivery for them, and it also creates useful outcomes for the clients, which are very important as business processes are executed by the vendors. The first method that many of the vendors are looking at is R&D. And R&D historically, from this IT services perspective, has never been a huge cost equation element. Many people do not invest a lot in research and development to develop new solutions. But this is becoming more of a trend, and we're seeing more and more, especially vendors in the BPO space, starting to spend dollars in research and development, leveraging their own resources to develop software and tools that they can actually use in their BPO engagements. The second method for really developing IP and bringing technology into the equation and to reduce the cost of providing business process outsourcing services is mergers and acquisitions. Certainly when somebody comes out and has a unique solution, but they don't have the breadth and depth to promote that solution on a global basis. Traditional BPO firms that have already established that infrastructure to deal with clients acquire the firm so they can roll it out across the board. So certainly there's a little bit less risk involved, but there certainly are elements that need to be considered when you're acquiring a firm and or merging with a firm in terms of cultural differences. Does the solution actually fall in your wheelhouse in terms of your own past experience? And therefore, you already have a client base that could accept the solution and utilize it well. The third approach to developing IP is joint ventures and alliances. Certainly, not everybody knows everything about everything in the world, and/or there are specialists out there in the marketplace. There are software specialists that provide software stacks that are excellent and can work very well in the BPO environment. Analytics is the prime case here, where there are so many now analytics solutions and software stacks available. Integrating them and utilizing them in the BPO process certainly can bring a lot of benefit and added value to the customer. And therefore, many of the firms involved in BPO are moving in that direction and aligning with many of the software vendors to develop solutions that can provide business outcomes and business benefit to the client. And the final approach, and it has been utilized, but it sometimes creates some issues, is actually leveraging customer engagements to develop IP. We've seen that many of the BPO outsourcing vendors typically, develop certain solutions very specific to their clients, and there are cases where these solutions actually ultimately end up getting rolled out into a full-blown solution that they can offer to additional clients. Usually there's a lag involved because the client that originated the solution and where it originated from usually wants a little lead time against the competitors. So there are certain issues involved in that approach. The real success we've seen in the industry has been really going through the merger and acquisition and joint venture approach. With that, I'm going to actually let Patrick talk a little bit about acquisitions and IP.
So acquisitions in the BPO space is radically different than in the rest of IT services. Okay, that's not actually true at all. It's no different than anywhere else within the IT services space. But I think it's worth calling it out here. And we have this slide built specifically to look at a couple of examples, both cloud and analytics, and the way that acquisitions and IP have had an impact on BPO throughout that space. So you can read what's here. I want to call out two particular vendors that are on this list. One is Capgemini, and their Ready-to-Series brand that is industry-specific solutions that allow them to accelerate long-term revenue growth within BPO. But what's interesting about it, and by industry-specific, I mean they have solutions that are developed for insurance, banking, retail, a couple other industries as well. Most interesting to me about it is that the Ready-to-Series falls within exactly the pattern that Ramunas was just talking about. It was developed using some R&D investment on their own, joint partner offerings, and those were done in particular with SAP. So as Ramunas mentioned, the software players as a partner, and then they made acquisitions in order to fill out the rest of the portfolio and what else they needed. On the other side of the slide, IBM. We built this slide well before the announcement yesterday that IBM has launched its first real commercialization of Watson with USAA Bank, and that's just a perfect example of how on the analytics side we're going to see more of that. That's IP that there's no better example, I don't think, in the IT services space of true IP that was developed from the ground up by IBM. And here within the analytics side of the equation, they're able to bring Watson together with USAA, a very non-traditional bank, and apply predictive analytics and Watson's own brand of intelligence to offerings going forward. So that's what we're seeing in terms of acquisitions and innovation in this space, and I will turn it back to Ramunas.
So with the next slide, we actually look at one of the key drivers underneath the BPO outsourcing revenue growth. Business process as a service. What's happening is that as technology is being melded into the business process activities and the outsourcing of those activities, really a whole new discipline of business process as a service is evolving and growing very rapidly. It is probably the key underlying driver for BPO growing as fast as it is right now. We've seen that, in fact, that business process as a service is actually one of the growth leaders in the cloud space itself in terms of what's actually growing more rapidly than software as a service or platform as a service, and in fact growing faster than infrastructure as a service. But it yet composes a very small portion of the overall cloud environment, and is still a small segment of the overall business process outsourcing environment. What's driving this growth? As I mentioned earlier, the BPO business has commoditized, trying to move labor arbitrage away from labor arbitrage and apply automation and technology to the equation and create a better value equation. So vendors are really trying to connect analytics to the business processes and try to deliver additional value from the standpoint of enabling clients to either figure out more quickly how they can react to their customers, how they can improve customer satisfaction, how they can really generate more revenues and effectively become a better business themselves. And this is really the focus of the business outcomes. What's interesting is that they're not just connecting analytics to the BPO processes, two separate entities, but they're coming out with solutions. And these end-to-end solutions that build the whole process for you and execute and solve a business challenge is really the route that is occurring in the marketplace. And one of the cases in point is one of the vendors on the next slide that we're going to talk about a little bit, Gentech. For those, I imagine everybody's heard of Gentech. Certainly everybody knows that they're a professional services firm that's been transforming and running business processes in a number of different select industry verticals. One of the things that their approach is that they do not cover all the industry verticals. They don't focus on everyone. They are very selective in targeting where they play. As a spinoff from General Electric, Gentech has a heritage of applying industry solutions, and specifically industry engineering solutions like Lean and Six Sigma to business processes. The company's name, Gentech, actually reflects the terms generating impact for clients. That's really where it evolves. And this is very interesting, especially in this day and age where we're all looking at outcomes. It's almost as if Gentech was already thinking about this as they performed years ago. The impact, however, is not just cost savings. It's also assisting in generating business value for the clients, and that's the key element that they are doing. This slide here kind of depicts, that they're actually looking at a number of the different avenues that I mentioned previously. They're investing $40 million+ in R&D to create IP-based solutions, and spending some of that money as well in terms of creating client-facing resources and solution architects with domain expertise to convey the benefits of the solutions to their clients. They're basically trying to make sure that not only do we have the solutions, but the clients understand how these solutions provide you business value. Gentech also acquired Pharmalick Consulting just recently to develop outsourcing solutions to assist the life sciences firms in dealing with regulations, specifically in the pharmaceutical field. So they're actually acquiring a resource, a specific consulting resource, to help them broaden their expertise in the processes of regulations and technology. And then they also have approached and have started working with Market to launch the Market Gentech Know Your Customer services. And this is an interesting service which is being launched actually with 4 leading global financial institutions. And the solution standardizes and centralizes the collection and management of customer information so that the customer-client outboarding can be accelerated for the various banking institutions. And it's a solution that we believe is going to probably get a lot of traction with the banking industry from that standpoint, since the banking industry is so competitive in terms of who you're going to bank with and how do you get people to come to your bank rather than somebody else's. So they're addressing a specific business challenge, but they're putting it all together in terms of the processes, in terms of collecting the customer information, leveraging the solution, and presenting the solution to the banking industry. Again, a very narrow, very specific industry vertical approach. And this is kind of the trend we're seeing across the board. So what's been the end result for Gentech? Well, their BPO revenues actually, in this benchmark, grew at over 5%, well above what we have as an industry average for all the vendors in the benchmark. So they really are succeeding in what they're doing. We believe that creating industry-specific, industry-specific vertical solutions is going to be the key to success in the future for the BPO industry. Delivering those services and those solutions effectively and in a cost-effective manner to the clients is always going to be a challenge. And it's going to be a challenge not just to grow revenues when you do this effectively in terms of delivering these solutions, but also in regards to profits. And with that, we're going to focus a little bit on delivery and what's going on in the delivery space of BPO.
Thank you, Ramunas. Hello, everyone. So we spoke about, my colleagues spoke about so far about the development of portfolio and revenue, how is it being impacted, and what vendors are doing in the BPO space to sustain competitiveness. What I want to touch base on the next couple of slides is talking about the correlation of delivery and headcount and how that impacts resources, hiring strategies, and what vendors are doing and what's actually the end result for vendors. On that next slide, what we see is an interesting correlation, and probably not surprising to most of you. Looking at the revenue growth deceleration and headcount growth deceleration, and as my colleagues already mentioned, the advent of cloud as well as adoption of automation for service delivery is certainly impacting those two metrics. We see revenue eroding, but we also see headcount erosion faster. The chart here represents a sample of 14 vendors that we actually track in our global delivery benchmark. All those 14 vendors are actually part of IT services benchmark, but that correlation and that trend actually applies for the most vendors within the IT services benchmark. It's just a sample size, but it does represent a trend across the industry. What we see is that the vendors are really slowing down hiring. We don't expect vendors to stop hiring or laying off people, but it's more about selective hiring. The human component will remain in terms of development and the portfolio development. But on the delivery side, the automation is certainly taking its place in that inflection point where vendors are aggressively, one more than the other, investing in automation for service delivery. There's two parts. One is within the development of the software for products, and the second piece is of automation and delivery piece of it. And as I mentioned, this is we talked about the different service lines, the BPO revenue decelerating. It's still growing faster than most of the other service lines that we track here in the study. However, it's on the downslope. It's on the downslope trend, and of course that's been impacted by cloud delivery and the erosion of cloud revenues because of the way cloud revenue streams are being annuitized throughout the length of engagement. Bottom line, if you look at that chart, if you see it, two of the metrics of revenue decelerating and headcount growth decelerating, something must be improving in order for the vendors to sustain their competitiveness. So what we're going to see is really the impact really is impacting positive in impacting their margins. What we have found is that throughout those 14 vendors that we just saw a sample for the headcount out there, margin actually expanding faster than the headcount growth than the revenue growth. And it's not a surprise because, again, if they're not generating revenue, they have to, it's just that part of the equation that has to generate profit that it has to be reinvested in the business to start like the R&D or the M&A, what we just talked about, and get the vendors to remain, to expand their portfolio. A couple of the vendors that we picked up here is they're not surprisingly Cognizant, TCS, and IBM. If you recall, on the previous slide when we Elitsa talk about revenue growth, Cognizant and TCS were highlighted as the fastest, the BPO revenue growth was the fastest among the vendors within the IT services benchmark. It is not a surprise. I mean, the scale and the size of revenue is smaller, but the expansion is faster. The companies are certainly, those two companies are certainly investing. They're very aggressive in their portfolio development. Typically, India-centric vendors, they're being viewed as the fast followers. Both TCS and Cognizant have indicated that they have the appetite for innovation, and they are, through their business cloud portfolio for Cognizant or the recently developed digital solution software group for TCS, they are looking to that direction and getting that automation and portfolio expansion in a faster pace, as well as while they're reducing the headcount additions. They still continue to add headcount, but again, very selective. They're adding onshore headcount for their consulting purposes so they can generate a higher value engagement, so they can bring back, and they have the offshore delivery base already set up in place that can, on a low cost price point, to still maintain their margin performance. On the other token, we have IBM, the 800-pound gorilla, so to speak. The company usually dictates the market environment. What they've done is, and we see that shift and rebalancing of their delivery model across the service group. Recently, they divested their customer care within the BPO. We expect IBM to continue to rebalance their their portfolio and the delivery model. If you recall back on that same slide where IBM was positioned was more on the trailing of the revenue growth. However, the size, of course, of IBM is much larger. But we can't see IBM positioning for growth, but we also don't anticipate that they'll be looking to catch up so much on the growth, but more so playing as an arms dealer in terms of the BPO space and really dictating and positioning the other vendors how they're moving and what they're doing in the market. With that, I want to move on.
Yeah, so I'm glad you used the term arms dealer there, because I know in discussions that we had on this before, it's possible that Ramunas, you brought up exactly that term when you were talking about IBM. Do you want to expand on that a little bit?
Well, we know that IBM is become a very much a services and software firm. They pretty much backed away much from their hardware environment. Certainly, we're getting out of the PC business, now out of the server business. But they have always been very focused on software. And through that element, we believe that they really are developing a portfolio of many software elements that can be leveraged not only in the BPO space, but across the whole IT services industry. So therefore, while they themselves do want to compete to a certain extent in the BPO space and in the IT services space, they also are in a position to deliver many of the tools that the various other vendors, partners, even with the evolution now of the cloud market and managed service providers, all can leverage from IBM to really drive the equation in terms of how do you reduce your IT costs. And IBM has the tools to provide that, so that effectively they become an arms dealer for everybody else in terms of providing the key tools that can be utilized in the industry. And their analytics capability certainly is one of the key elements of this equation.
That's a good, being an arms dealer is a good position to be in. So we'll wrap up now. We've got one last slide before we take questions. I just want to throw out there, these are the research areas, the different themes that we're examining as we go forward into the next round of research to produce the next round of this particular benchmark. Security, talent management, and Canada and Latin America. What we try to do every time we do the benchmark in order to keep keep the information and the analysis fresh for the folks who get it is present different areas that the research into these vendors have pointed us to. So we're seeing across the board that security has changed. It's become much more of a, well, it's much more of an assumed service. It's much more that it's going to be part of every package you get. So what does that mean for the different security offerings? Talent management, this comes up again and again where both clients we talk to, but then also folks we talk to in the IT services world more broadly complain about the lack of talent or the competition for the top talent, and honestly where that talent ends up going, offshore, onshore, client side, or somewhere else, a center of excellence or something. And then finally, Canada and Latin America. It's difficult for us to narrow down to one particular region, or in the case of Canada, one particular country, but what we like to do from time to time is dive as deep as we can within that kind of space. It allows us to show a more, more detailed and more different picture of the IT services landscape. So that lays it all out there for you. I hope this has been useful, and we will now open it up for questions. Allison?
Great. So we had a couple questions come through. So if anyone out there does have a question, please send them through at this point. The first question we have, you guys, is, will healthcare and financial services continue to outpace other industries? If not, what will be the hot markets?
For our IT services benchmark, we typically don't target specific industry verticals in terms of examination. Needless to say, they are mentioned in many of our reports because a number of the various companies do target one or the other industry verticals. We do also have a separate benchmark that covers the healthcare industry, our HITS benchmark, and that does get into some of the details from that perspective. In terms of the business process outsourcing industry, I mean, the financial services industry is the prime candidate, and much of the play is going there. In terms of another, not necessarily industry vertical, but focus area is HR outsourcing. Certainly an area where there's a lot of interest. Trying to minimize costs associated with human capital has always been a challenge for many firms. And I believe that with the ability to apply analytics to the HR processes, both on the healthcare side as well as on just managing people within organizations, that certainly is a key area that's going to be grabbing a lot of additional attention here in the future.
Ramunas, is automation going to play as well in HR outsourcing?
Certainly. I mean that's the real key. You can't basically through labor arbitrage really reduce a lot more of the cost.
Right.
So processes and tools have to be developed to help automate the processes. That does drive cost out. Clients end up then for spending less on that kind of process within their organization, and every organization has HR activities going on in them. There's no industry that doesn't have something from that standpoint. The nature of the beast, however, is different. A manufacturing industry has different HR issues than a business office or a lawyer's office. I mean, they're far different from that standpoint. And administrating the benefits and the various issues that arise around your human capital in those organizations, and figuring out automated ways to handle the challenges that those organizations face is certainly key areas of future growth.
We have another question. It's regional specific, so we might have to tap into the GDML stuff. If the Philippines have a strong talent pool, which other vendors are there? Is everyone present in that region?
So, Philippines is certainly a country that's been famous for a while in terms of like the BPO services. When you hear about IT services in Philippines, the first thing comes to mind to many of us probably is BPO. And it's not surprising. I mean, Cognizant pursue acquisition there. But from a global delivery perspective, and what we track in the global delivery benchmark here in TBR, I mean, all the vendors that you just saw in terms of the sample size, they do have presence in Philippines. They are one have more, the other one have less in terms of their mature curve of investments, in terms of the global delivery model development. So Philippines, in terms of players, is almost, at least from the global delivery perspective, not a single company that's missing an office in the Philippines. What's interesting actually is Philippines is maturing as an emerging market, and vendors are exploring opportunities to expand beyond the so-called Tier 1 cities like Manila. They're looking more opportunities into Tier 2 and Tier 3 cities. They sustain, which allows them to still tap into a low-cost talent in low-cost location and really get into sustain their margin performance, because as the emerging markets mature, cost of living rises, wage hikes, that kind of forces vendors to explore those Tier 2 and Tier 3 cities. I believe most recently Accenture actually launched their rural BPO program, which is a perfect example of exploring, specifically for the Philippines, exploring the opportunities in Tier 2 and Tier 3 cities. So vendors certainly investing, and Tier 2 and Tier 3 cities are on the horizon to sustain that low-cost delivery and price competitiveness.
So I think if the IT services revenues that we start seeing coming out of the APAC region as a whole start to move upwards, we may need to do a little bit deeper dive on APAC and look at the Philippines in particular. At the moment, though, they've been going down, so I'm not interested in chasing after money that's disappearing.
No.
Were there any other questions?
We just had one come through, and I think it's going to Ramunas. It's Gentech specific. Gentech seems to be doing everything you listed on slide 11. So let me take us back to slide 11 real quick so everyone can see. Here we go. Customer engagement through R&D, is everyone else doing that too?
Not everybody's doing everything. That's for sure. And part of that, and we see that as a consequence, and when we dig deeper into our respective reports in many of the companies, the financials don't necessarily enable you to do everything across all the 4 avenues. For certain firms that have a lot of available capital and cash flow, certainly mergers and acquisitions or reinvesting that capital into their business is a sound solution, and it really enables them to go that route. For firms that are either cash strapped or are really trying to improve their profitability and want to keep the profits within the organization and maximize that, alliances are certainly the route to go, because you basically can leverage your alliance partner not only for intellectual property and development of that property, but you can also leverage the alliance to actually help you in terms of engaging with additional clients, so you don't have to make additional expenditures on the sales and marketing side. And as I said before, leveraging existing customer engagements does take a little bit of legal wrangling with your client. Usually those kind of scenarios are decided up front whether or not the IP developed can be put out into the marketplace. And as I said at the beginning, there's usually a wait list. So no, not all firms are doing all of it, but every firm is probably doing one of it at the very least.
But within the BPO space, Gentech stands out because they are almost doing all of it, right?
Yes, they are. I mean, that's one of the few. And as we saw in in one of the initial slides, they certainly are up there in the upper right-hand quadrant in terms of their growth in the marketplace, their size as a firm, in the BPO space. They've been doing it a long time, and they recognize what's needed for the future.
I think that I guess it's important to note too that we focused on, as we said at the beginning, BPO. So some of the examples and some of the vendors we talked about, we tried to stay as much as possible within that BPO realm. So 3 months from now, when we do the next IT services benchmark webinar, we'll focus either on a different service line or take a different approach to what we cover in this. But hopefully that was all useful.
So we don't have any additional questions in the queue. So with that, I'm going to talk slow for a minute, see if there's anybody else who has a last-minute question. And let's just shut to the webinar. So as we mentioned, you are going to be getting the slides tomorrow. So those of you who have asked already for the course of the webinar, we will be sending those out to you tomorrow. I want to encourage everyone to follow Patrick, Elitsa, Ramunas, and Boz on their Twitter handles listed here. They are putting out opinions every day on what's happening with the companies throughout their research. So I do encourage you to follow them, as well as TBR, to get more insight into what we're seeing in the market. And encourage you also to join us on SlideShare, YouTube, and LinkedIn, where a lot of our content is going up that you were able to download and take a look at. As Patrick mentioned, we're doing another IT services webinar in 3 months, but we also have some cloud professional services webinars. I think it's on the 30th or the 31st. We do encourage you to look at that. That's customer-focused research, and we go into the high-level findings of that during those webinars. So you can go back to the homepage for the WebEx and register for that if you'd like to. So with that, on your way out, we do have a quick favor. If you can fill out the survey, it's 3 quick questions. How valuable was the presentation? How good were the presenters? And if there's additional open-ended feedback. We chose BPO this quarter because we had a lot of feedback last quarter on that was where people's interest lied. So if you would like to see something in terms of a specific topic next quarter, please do send that through. We do take the feedback you're giving us quarter to quarter very seriously to improve our presentation so that we're providing value for you for the hour that you do join us. So with that, I am going to wrap things up and keep the lines open for a couple of minutes in case there's any last-minute questions or comments. And if we don't hear from you now, we look forward to hearing from you either on our cloud webinars later this quarter or next quarter on this IT services benchmark. So thanks, everyone, and have a great afternoon.